We are back with part two, and my guest still on StansberryInvestor.com is Harry Dent. Harry, welcome back. Thanks for continuing the conversation here. We were really getting passionate and about this right now, calling for a massive crash. And my question to you is, how does one protect themselves in this environment? I want to talk Bitcoin. I want to talk gold. I know you like treasuries. Let's start with that.
Well, I forget the guy, Sir Rothschild or whatever. He was the richest man considered of the 1800s. And somebody asked, Baron, what is the secret to your wealth? And he says, I always pot out a little bit early. That's what he said. That was his answer. Because bubbles build faster than normal bull markets. And if anybody doesn't think this run up since March of 2020 bottom is not a bubble, somebody comes and tells you that's not a bubble, I slap their ass and then say, are you still there? If you do not think that's a bubble, look at that on the chart. Straight up in an otherwise weak economy, bubbles build faster than normal bull markets, but crashes always come twice as fast as the bull side. Bear markets come faster. Fear runs faster than greed. And we've got unprecedented greed. Every dumbass in the world is in stocks right now by now, or buying something overvalued or crypto or something, okay? And crypto's got a lot of future, just way overvalued. Amazon was 136, the next thing you know, it was 6. That's how overvalued it can be, even if you have long-term potential.
I'm happy you brought up crypto because that's what I want to focus on now. But all this talk about bubbles, probably the best advice I ever got in regards to bubbles was from Jim Rogers, who said there's 2 types of people who get burned in bubbles: skeptics and believers. Makes a lot of sense in this environment. Okay, let's talk Bitcoin. You have said you wouldn't be surprised if it comes down to 0. But when people talk about Bitcoin as being the new gold, the future, we're seeing a revolt against the Federal Reserve. People want to change. They want a new system. How can Bitcoin not be part of that future for you, Harry?
It is actually. I call it the digital gold. It's just not yet. Gold, the value of all the gold in the world is about 10 trillion, okay? The value of all the Bitcoin is now about 1 trillion. Bitcoin, I've got a whole chart for this and in one of my recent newsletters. Bitcoin ultimately projects out maybe 5 or 10 years from now to be as high as $1 million, okay? So I am not bearish on blockchain or Bitcoin. I got, you know who's moving to Puerto Rico? All the crypto guys. They're making a lot of money and they're smart enough to save taxes. This is the best tax advantage sanctioned by the IRS. You don't have to hide from them. You just got to follow the rules. So I know all these people. This is Internet 2.0 to me, okay? It's just in the early stage. Remember I said before, Amazon, let's call Amazon kind of one of the leading .com, not broad internet or computer, .com stocks. Amazon only went public in 98, started in 97 or something. It was nothing burger. Went from 4 to 136 and then crashed, in a crash like I'm saying, back down to 6 and then recently hit 3,500 something. So you have a baby boom when new technologies are first emerging because they are the thing of the future, but they get overvalued as if that future is now instead of 15 to 20 years from now. Then they have the big crash. Oh my God, were we idiots for paying $136 for tiny little Amazon? And then you come out of it and Amazon and the .coms become the next big thing. The internet index outperforms the NASDAQ and you have the great boom. And at the end stages of that, guess what comes out? Internet 2.0, crypto. So Bitcoin, I see as the standard, the potential, exactly what you said, gold standard for new digital currencies that transcends governments. Nobody controls. It's not their dollar or their reserves or da-da-da. It is Bitcoin becomes the gold for the world for a digital system. And Bitcoin goes up to where I'm projecting it would be up maybe about $20 trillion when it hits its upward potential. But it's a standard. It's not going up because it's going to produce income, even though you can borrow against it, do stuff. Bitcoin is the new standard if it succeeds. And that's powerful. Ethereum is an example, or Coinbase, but Ethereum is a better example. Ethereum is a platform for constantly spawning off new blockchain apps or coins, okay? That's the real company, okay? So both of these are going to crash because they're overvalued, but both of these are the future. if we have this crash I'm talking about by late 2022 or 23, the first thing I would buy, because nothing would outperform it. It's just like buying Amazon in 2001 to 2, okay? The first thing I'd buy would be the surviving coins. But we have, you know how many coins we have? I heard 8,001, but the most solid source said 4,000 coins. It needs to shake down, just like the car companies went from 100 to 40 to 4, okay? The new industry has a lot of entrants in the early growth stage, and they keep getting shaken down. We're going to have a big shakedown in the crypto thing. The surviving companies, you bet it's going to be Bitcoin, Ethereum, probably Coinbase, a number of others. I'm actually buying Packet right now. Okay, I don't do a lot of this, but we got a friend down here who's got an into a little secret weapon here. So it's the next big thing. It's just like the internet now. If you'd have bought Amazon at 136 when it's supposed to be the next big thing, you'd have watched it crash to 6. Wouldn't you rather buy it at 6? So I'm totally bullish on this space. It's not the right time. This is like buying Amazon at the peak of its baby bubble before the big crash comes, and then the daddy bubble to follow. There's a daddy bubble coming in crypto. I always, when I'm giving speeches, I always say the blockchain is like the internet on an 18 to 20 year lag. It's the same thing, a new S curve emerging, slowly in the niche markets. It's going to explode mainstream a couple of years from now, and it's going to just be as big as anybody in that space is talking about, and maybe bigger. They're just going to get a big shakeout for it. It's the wrong time to get into this.
Well, what happens when you see these stories break out, speculative stories like Doge? You know, it was the crypto of the moment last week. We saw what happened after SNL and Elon Musk. I mean, do you even entertain those? And is it a way to, you get in, you make a quick buck and get out, or you don't touch those at all?
Well, I would be more that, yeah. I mean, okay, that is another sign of a bubble. The fact that something like that could get bid up that much because Elon Musk is going on Saturday Night Live and then drop 30% when he cut a bad joke about it or said the wrong thing, that's a bubble. That's not a sane market. The same company that gets blown up out of proportion. All Elon was trying to do is be funny. Everybody wants to go on TV and be sexy and funny. They'd rather be sexy and funny than be a billionaire. He just proved it. But he should have said nothing.
Do you think he should have a greater responsibility, Harry, knowing that he can impact the market and people can lose a lot of money?
Yeah, I do think people should. And I think people shouldn't be recommending early stage. This whole blockchain is so early stage, should not be for most investors. Let it shake out first and prove a more projectable pattern. People just say, oh, you can't lose, you can't lose. I'm telling you, you can lose. Now, I am not saying, here's my projection, rough for Bitcoin, okay? Let's say it's peaked here at 65 or whatever it was, okay? It goes down to about 4, not to 0. And that would be it's already crashed 84%. That would be a 90-some% crash. And then it goes up to 500,000 to 1 million in the next global boom into 2037. That's my forecast. Early stage, it's too early for most investors to touch anything like this. It's so volatile and you can lose. And if it went up to 100, which is still a possibility, well, other thing, I would be very clear not if crypto and blockchain is still up at the end of this year, I would sell it at whatever price it's at, okay? Because it's been a very clear 4-year cycle on its halving thing. Halves and then 18 months later peaks. I think the broader global economy may cut it off sooner, but even if it goes to 100, let's say by November, December, I would sell it and I'd look to rebuy years later, and nobody should have all their money in that. And my crypto friends are rich today, and we'll see what happens. I can't talk them out of it. They're all in. And that's what entrepreneurs should be. But I think they're going to lose more money than they can imagine before it turns around.
Has gold been dented by Bitcoin? And what future do you see? What future do you see for gold?
Yes, it has. Gold, I mean, Bitcoin is, I've shown this in my newsletter. Okay, everybody said, Bitcoin has taken some of the bite off of gold. Gold should have done better coming into the late stage boom. And gold in the 2008 crash actually went up for the first several months before it crashed, okay? So it has taken some of the wind out of its sails. But bottom line, Bitcoin clearly correlates more with stocks in the stock bubble. There's no question about that. If you look at the whole movement, gold often go most of the time goes against stocks. Bitcoin goes with stocks. In this late stage, it's taking some of the bite out of gold. My forecast would be if we do see the economy, stocks actually start to crash. In that crash, I think gold would hold up, not as good as 2008 because it already showed it could fail, but gold would hold up early into that better, and Bitcoin would go down faster out of the two. So gold's still a better safe haven, but only for the earliest stage. Ultimately, gold goes down too.
So when you hear talk, oh, gold's going to disappear in the future, Bitcoin's going to overtake it, is there
no. Okay. Let me back up again, though. When I said $10 trillion a day, only 3 of that is investment gold. People just holding gold for investment. The other 7 trillion is on your fingers and your necklaces and whatever. Indians wear it on their toes and stuff, you know. So gold is a real commodity. And I'll tell you the 2 countries who dominate gold buying and love it the most, and you can guess who they are, China and India. Now, China's seen its best days, but still has a lot of urbanization growth. India is going to be the next China and the next boom. Okay, and people don't think that's possible. Mark my words on that. They may not be quite as strong as China, but India's got so much urbanization, more population, going to last longer. Those 2 countries, everyday people love gold. It's a little show of wealth, you know. They love it. So I see gold not being the safe haven, but holding up better than commodities and stocks. It already did it. Same thing in 2008. It eventually went down 50%, but it held up, no, it was 33%, held up better than commodities and stocks. But it's not the safe haven, but in the next boom, I think gold will do very well.
Would you wait for gold to come down, or would you be buying here?
No, don't buy gold. Wrong time to buy gold, wrong time to buy Bitcoin, wrong time to buy stocks. Right time to either be getting more cash and balance or to start buying treasury bonds. By the way, the treasury bonds do the best when the crisis gets deep. Most of the gains in the treasury bonds in the 2008 crash came in the second half of 2008, not the first half. So the treasury bonds will really pay off as the crisis gets worse. Nothing else. Even again, gold paid off in the early 2008 crash and then went running for mommy like everything else. So treasury bonds are your ultimate safe haven. Nothing wrong with cash, especially if you're not sure if I or Peter Schiff are right. But I say gold goes to 1,000 roughly, and then sees 3, 4, 5,000 in the next boom. Okay. So no, I do not want gold for the downturn. And if you want gold, put 5% for diversification and counter thing. And if it goes up modestly in the early stages, then I would sell it, because it'd be tracking exactly what it did in 2008. So no, I'm not recommending gold.
Harry, let's do a commodities roundup then. Silver, I'm sure you hear this often. I get it a lot. It's cheap. It's halfway away from its nominal high. Why wouldn't you buy silver here?
Well, it's also more than halfway away. My target for silver has always been like $5, $6, 8 to 10 at best. So it's going to go lower. One of the things that is doing well at this point, where stocks are maybe stalling and other things are getting questionable, and commodities have done well recently. All this stimulus this everyday people are buying stuff, no longer rich people in investments. So it helps commodities, but commodities had a big crash. Commodities crashed first. People don't remember that. Commodities went down the hardest and the most. Oil went from 147 to 26 in a couple of months. Okay, so silver has already gone down, and it's been lower than this. It's bouncing. It may bounce a bit more in the early stages like gold, and it's going to go down lower. I'm very clear, and the commodity index has done the best here. It's going to go down one more time to new lows, or base retest. So I'm not into commodity, not into silver, not into gold. If I had to hold one commodity, and somebody says, okay, you got to buy one of these commodities, and it could be something like palladium or weird, I would hold gold. Gold held up the best in the 2008 crash of the big commodity complex. Gold held up the best because it still has that safe haven perception, even though it's not really quite true. You know what I mean? Still has that perception.
Let's round it out here. Talking copper, there's talk it's the new oil, that we could see it hit 20,000 a ton. Thoughts on copper?
Yeah, copper's the same. It's copper, lumber, palladium are the biggest boomers in the CRB, the commodity index. So So that, and as soon as housing shows weakness, then they're going to go down. I mean, they are going to go down so fast you won't believe it. I wouldn't touch lumber with a 10-foot pole here. I had to buy one of the two. I'd buy the copper or the palladium, okay? But they're going to go down because this is housing driven. And the one thing I've been warning people on my newsletter is that in the 2007-8 crash, certain things happen first, okay? So it's not the same order this time. Real estate peaked first in that downturn. Real estate peaked in early 2006, stocks peaked in late 2007, and then everything collapsed kind of together at some point. So this time, I think stocks are peaking first and real estate will follow a bit. So you're really looking for the danger in copper and lumber, especially. You're looking for when people finally realize, oh, housing prices are going down too. Oh, and the housing bubble's over. Stocks to me this time are a leading indicator of the real estate bubble. I tell people who are hanging on to real estate, okay, may not believe me, but if stocks start to crash, that's your signal. You better start selling that real estate then, because now you've got a very short view. But I expect the real estate to hold up better at first than stocks. And that's good for lumber and copper.
Okay. Really good thoughts from you, Harry. Just closing remarks, any final wisdom for all our investors, viewers watching today?
Well, I think my final wisdom, I just tell people, the way the smart money thinks, the longer a market, a commodity, a stock, bond, whatever, a country goes up, the more risk they see. Everyday investors are the opposite. The longer something goes up, it's like, oh, you can't lose buying real estate. Can't lose buying large cap stocks. That's the death knell. And that's why, what's his name? The guy who sold out at the top of 29 with the shoe shine boy, spacing out right now. That was his only insight. The shoe shine boy is telling me you can't go wrong buying stocks. He sold everything right there and made a fortune. That's the wisdom. You have to think contrary, especially at extremes. When stocks have been going up and are this bubbly, you've got to think contrary, and you cannot sit there and think, well, something's different and this will be the first bubble never to crack. It's the same on the flip side. I'm going to have a harder time on the downside if things finally crash and we see the biggest, this will be bigger than 82, 74, more like 30 to 32. When people see a crash like that, they don't want to invest in anything for another decade. They're shell shocked. That's exactly when you should step in and buy. So you have to be contrary, especially at extremes. I'm telling you, if you look at this, especially look back at this stock bubble in the NASDAQ or the S&P, whatever major index, since the COVID crash into March, and look at this compared to the bubble before it and say, this is not a bubble, and this is not an extreme period, and something's wrong with your eyesight. This is an extreme time, which means that alone should make you think like Jim Rogers or me and question things and get more cautious. The smart money thinks that way. The dumb money thinks, well, it keeps going up and my cousin's making more money than me, so you can't lose buying real estate or these stocks. When people say you can't lose is when you're most likely to lose. So when you hear that, run.
Some good thoughts, because I can't tell you how many times I've heard you can't lose money in real estate. Just one last thought. Since this Doge episode, I've had people saying, well, now I'm looking for the next Doge. I'm scouring all the coins, looking for whatever's cheap, and I'm just going to put some money in there and hope it's going to be the next Doge, and I'm not going to name the coins, but, we can all guess what those coins are. What do you make of that as a strategy? Like, if you're willing to risk the money, it's fine, or?
Well, that's a strategy that can work short term. You can watch these cryptos. Remember, there's 4,000 of them, okay? So there's plenty to choose from. You can watch new ones emerging. I have only invested in one and recently, half it. I don't even know how that may be. I'm doing it through somebody who has an in, okay? Because it's really just catching on. So you're going to keep having all these things pop up. And then they mature and they all get overvalued. But if you can catch something new that's just getting discovered, yes, you could make a quick gain. Am I going to hold this through the downturn? No, I'm not. It pops up and stuff. I'm not buying this at 6 cents. If it goes to $1, I am out. That happens in 4 weeks. I'm gone. take my money and run. But that's just one little thing, and I'm doing only a tiny bit of money, okay? But in general, yeah, if you find the right thing, but it's a short-term strategy because this whole space is what I said earlier, the epitome of this entire greatest and most global bubble of all time right now is the blockchain and crypto sector. And they're not even stocks because they're coins except for Coinbase. And Coinbase is already running for mommy, okay? Went public and got overvalued. So that's the epitome of this bubble. So you're buying into this. This is where the biggest crash is going to be, and it's going to be sooner, not later.
Harry Dent, I appreciate you coming on. Fantastic conversation. Thank you for your time.
Yeah, harrydent.com, free weekly newsletter. I know I'm saying a lot of outlandish stuff, but if you follow us, you'll see we're a lot more rational than you think. I explain everything in my newsletter, and I don't say anything without documenting it with hard facts and charts.
harrydent.com. Come back anytime to stansberryinvestor.com. We love having you, and thank you all for watching. Remember to keep sharing us where you watch us. That's it for me. I'm Daniela Cambone.